Morning, dear students. Hope you all are doing good at your home and studying hard. You all are welcome in the e-learning initiative of Cambridge International School, Dasuya. I, Mr. Sunil Kumar, PGT Accountancy in Cambridge International School, Dasuya. Today, we are going to do another topic in business studies. But before begin with the topic, let's recapitulate what we had done yesterday. Few days back, we started chapter number 4, Business Services. Business services covers insurance, transportation, warehousing, communication, and banking. So these five sectors plays very important role in the formation and in the expansion of a business. Dear students, let's recap what we did yesterday. Yesterday we started insurance, which is one of the service provided to the business. Insurance, life is full of uncertainty and risks which are beyond human control. Both life and properties are exposed to risk of accident. Insurance is a mean of providing against loss caused by natural or man-made factors. Insurance is the substitution of small periodic payments, that is called premium, for a risk of large possible losses. Now, dear students, we know that life is full of uncertainties. Anything can happen at any point of time. We all know that we are living in a world where there is a proxy war going on. We are in a world in which any natural calamity can take place at any point of time. We don't know when earthquake comes, we don't know when flood comes, when tsunami will come. So these are the very large factors which affects our life, not only our life but also our property. So insurance is one of the protector which protects ourselves, human being, as well as their property. But insurance cannot eliminates the risk of loss, but it can minimize the risk of loss. What we do, we pay some periodic payments, that is called premium, to cover the large possible losses. Insurance pays us when we lose some property, when we lose life of a person. Insurance pays for it. So in this way, insurance is giving us protection to save uh, property as well as human lives, which is certainly not a thing which can be saved, but we can just try to compensate through insurance. Few principles we covered yesterday. These are number one is principle of utmost good faith. Number two is principle of insurable interest. Number three is principle of indemnity. Number four is doctrine of cause proxima. Number fifth is doctrine of subrogation. Number six is principle of contribution. Today we are going to do life insurance and fire insurance. First, we will take life insurance. A life insurance policy is basically a protection against the uncertainty of life, that is, death. Life insurance may be defined as a contract in which the insurance company, called insurer, undertakes to insure the life of a person, called assured, in exchange of a sum of money called premium, and promises to pay a certain sum of money either on the death of the assured or on the expiry of certain period, whichever is earlier. So life is full of uncertainty. We all know that uh, anybody can die at any point of time. So insurance company compensates the value of life when a person dies. For this, there is a contract between the company and a person. Here, the company is called insurer and the person who is taking insurance policy is called assured or insured. Person gives some amount of money which is called premium. In return, company promises to the person that in case of his death or the expiry of that period for which the amount has been premium has been given to the company, whichever is earlier, then the company will pay to the person. So life insurance covers the life of a person. Now the importance of life insurance. Number one is life insurance provides protection to the family at premature death of an individual. It means uh, the family is protected if the person dies. Number two, it gives adequate amount at an old age when earning capacities are reduced. If you become old and your life insurance policy expires and you did not die, then the company gives you a handsome amount by which your old age will be a good, you enjoy your old age. Number three, life insurance is not only a protection but is sort of investment. So we have seen that in at the time of old age, you are getting huge amount. So due to which you enjoy your old age also. So life insurance is not only the protection, but it works as an investment also, which gives you return in future. Here are the main elements of life insurance contract. Number one, the contract of life insurance is a contract of utmost good faith. The assured should be honest and must disclose all material facts about his health to the insurer. It means that both the parties, company and the person who has taken insurance, must disclose all the information to each other. Like company should disclose all the terms and conditions to the person, and the person should disclose all his material facts about his health. So in this way, they both develop faith in each other. Number two, in case of life insurance policy, a person has insurable interest in his own life, in the life of his spouse, or in the lives of his children. The assured must have insurable interest at the time when the insurance is effected. Insurable interest at the time of maturity is not necessary. Now we will try to understand with the help of an example. Let's say a husband took the life insurance policy of his wife. After 1 year, the couple got divorced, and later on, after 2 years, the wife died. If the husband is making regular payment of premium even after divorce, then he will get the compensation for the death of his wife even after divorce, because the insurable interest must be present at the time of taking policy. So number three is, in life insurance contract is not a contract of indemnity. The life of a human being cannot compensate it, and only a specified sum of money is paid. That is why the amount payable in the life insurance on the death of a person is fixed in advance. Now, life is something which cannot be compensated with anything. When a person leaves the world, then a mother loses his son, brother loses his brother, sister loses her brother, wife loses her husband, son loses her father. So one person is playing so many roles that insurance cannot compensate all those roles. But What insurance is doing? Insurance is just paying some amount of money so that their life can go on. That is why the life of or the value of the insurer is fixed in advance. Now we will do fire insurance. Fire insurance is a contract whereby the insurer, in consideration of the premium paid, undertakes to make good any loss or damage caused by fire during a specified period up to the amount specified in the policy. A claim for loss by fire must satisfy the following two conditions. Number one, there must be an actual loss. Number two, fire must be accidental and non-intentional. So fire insurance is something you will be getting the compensation only if your goods are damaged by fire only, and the fire should be non-intentional or accidental, and there must be some actual loss. Then only the insurance company is going to pay you the compensation for the loss incurred by the fire. Now, the main elements of the fire insurance contract. Number one, in fire insurance, the insured must have insurable interest in the subject matter of the insurance. Number two, the contract of fire insurance is a contract of utmost good faith. The insured should be honest and must disclose all the material facts about the nature of the property and the risk attached to it. Let's take an example that if there is a cracker factory and they take fire insurance and they do not disclose that what material or what chemical they are using, then in case of fire broke out, whatever the loss they incurred, the insurance company is not liable to pay that because they have not disclosed all the information to the company. Number three, the contract of fire insurance is a contract of strict indemnity. In the event of loss, the insured can recover the actual amount of loss or maximum amount of the policy, whichever is lower, but not more than that. Indemnity means whatever the actual loss you incurred, you will only pay for that. The insurance companies are not here to give you profit. So the main motive of the insurance company is to provide you with the loss incurred, not to give you the profit on the property you have lost in the fire. Number four, the insurer is liable to compensate only when fire is the proximate cause of damage or loss. Now, the insurance company will only pay when the fire breaks out only with the proximate cause. Appropriate cause of fire should be there. It should be not the intentional fire. It should be an accidental fire. Then only the insurance company is going to pay you the damage or the loss incurred. These are the main elements of fire insurance contract. Thank you for listening it very patiently. Tomorrow we will be back with another topic. Till then, stay safe, stay healthy, and stay at home. Thank you.